The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. We meet each day, 2 to 3 Eastern, that the market's open. And I comment and ridicule some people in the market. Anyway, it is a market that's up 3 points on the S&P cash on the horns of the FOMC meeting notes just coming out. There were a great deal of comments, so it's probably going to take the market to digest them for a little bit, but certainly the market did not rocket off and out of the way. If anything, we are starting to pull back a little bit. 1966 on the S&P cash as I speak, 1.68 billion shares on the consolidated tape, which is, of course, a whole lot less than yesterday when we were seeing some push down. But we'll look at it. Gold's up about $7. No biggie there. I didn't see it right off the bat. But last time I looked, crude was maybe off 50, 70 cents or something. I'll have to check on it during the break. I just don't have it up on one of my screens at the moment. So not seeing a great deal of movement in many stocks, but we'll go through some. Of course, starting Friday is the big kickoff to the bigger stocks with Wells Fargo. I think they report before the bell. And then next week is going to be pretty much the Super Bowl of, or another Super Bowl. Or maybe it should be more the World Cup or whatever it is. What is this soccer thing going on? World Cup? World whatever? I don't know. I'm trying to avoid it at all possible costs. World Cup, isn't it? Is that it? Anyway. So as we look at these, I'm kind of waiting for the end of the day. Of course, we'll be going through delta neutral for option market makers. That's when they basically try to lock in any profits and make sure that the downside risks for the last 7 days of expiration are minimal. And that is a combination of buying and selling equities and trying to get rid and move people out of the underlying options themselves. And you normally get a little bit of volatility. So I'm kind of surprised that we haven't had that much so far. Maybe yesterday was enough to get enough of that volatility out, but we'll have to see. And it may just come at the very end of the day, mostly because the FOMC meeting notes have just come out. I want to welcome all those new folks watching us on the eSignal platform. And the people that have been our loyal and faithful listeners before that, too. Don't want to forget you guys. You got us to where we were and are. So, what else can we say? We're going to start off with a little bit of history, as we normally do. In 1932, the market hit an all-time market low for interest. And that is that they were open all 6 or 7 hours in a day and only traded 235,000 shares. No one wanted to buy, no one wanted to sell, and everybody just kind of looked the other way. And, of course, just a few days before we actually hit the lowest market cap of the stock market back to what was it, 1895? I brought it up yesterday or the day before. So it is kind of one of those things where you probably had to figure that you were probably somewhere close to the low when no volume comes down there, and probably the same thing at the tops. You get absolutely no volume, then probably a good sign that it's telling you something. We do have some interesting earnings news out after last night. Well, last night the Container Store CEO Kip Tindall came out, and he was talking about, consistent with so many of our fellow retailers, we are experiencing a retail funk. And I can't really believe the guy said that, but pretty funny, basically, blaming the consumer. This is one of those one of these IPOs that just came out recently, and gives you an idea just how far and how bloated these things were at the beginning. Wall Street's business is to push out paper, and why, as traders, we don't have to marry these stocks. It's pretty wise to know that these things can come in and take your head off at any moment because of valuations. And there was a lot of excuses, a lot of blaming customers, probably not a lot of things that Wall Street wanted to hear. I do have a small clip from the earnings call last night.
I ran out of gas. I had a flat tire. I didn't have enough money for cab fare. My trucks didn't come back from the cleaners. An old friend came in from out of town. Someone stole my car. There was an earthquake. A terrible flood. Locust. It wasn't my fault, I swear to God!
Well, Kip Tindall making a good case that it wasn't his fault. But it is one of those things where you have to say that you just can't blame it on the customer. And basically, he was taking a real shotgun approach at blaming just about everything. Weather, not weather, customers. When reality comes back, it is rather tough to figure out just what happens. And I have to thank him because it brightened my day. I got to use 2 audio clips that I had just sitting back here on the corner. Citigroup, the Financial Times says the city will be paying $4 billion in cash to the Department of Justice and have to set aside another $3 billion in relief for mortgage holders. Looking at Citi earlier, just not moving at all. Maybe we really have gotten to the point where they can just check off or write off $7 billion. It's no big deal. This was about twice as much as they had said. So if they had been writing off just $3.5 billion, it sounds somewhat dubious that the market would just laugh this off. Now, maybe it takes a couple of days to set in. Maybe we've got people on Wall Street supporting the stock today and going to be selling it over the next few days. But very interesting that Citigroup doesn't even budge, as we see a market that seems to be just Pollyanna about the future of just about everything. And we'll keep an eye on it. So up 5 points on the S&P cash now as people try to digest the FOMC meeting notes. Google, it was in inches. This is I'm going to call this the day of the rat, because everybody's ratting out everybody else. Google was within inches of the goal line in setting up and settling the EU antitrust case against it. But Yelp torpedoed it by filing a formal complaint. Of course, Yelp competes with Google in local search. Yelp doesn't do basically web searches. Yelp does, I want to find the closest Chinese restaurant to me and see whether or not people complain about their food and that kind of stuff. So anyway, Yelp is saying, well, Google competes against us. They're getting into that same business. They bought other companies that did that and kind of jumped in last minute to torpedo them. Why I don't have a slide for it, Apple's done the same thing to Google. When Apple got dragged in front of the man because of the in-app purchases where kids were buying $200 worth of points for whatever Blueberry game they were playing that day. and got taken to the woodshed. They formed also a complaint against Google, which, of course, does the same thing. But I don't know if there's no honor among thieves and or if it's something like that, or right now there's just a very unsettling, if I get tagged, I'm going to rat you out. If there's anything I can do to get the government on your back, I will. But not a good and healthy trend when everybody's looking the government to settle their issues via bank shot. But it is interesting to me. What about Kim.com Polar? What about him? Maybe you'll have to ask some more. Last I saw, he was hiding out in off the coast of with the Kiwis. Maybe there's some newer news. Maybe I'll get to check it out at the break, but maybe that. Anyway, that's kind of it for the news today. There's some more stuff going on, but more interesting to me right now is how the market reacts to the FOMC meeting. I'm going to say not a whole lot of reaction, and they're going to go right back to their deal where they're going to be buying. But I just don't see any volume that makes me, especially on a day when we're supposed to be going, with the FOMC meeting, to really be looking at it. Let's take a quick look at Citi here before we go to our next break. And, well, let me just redraw it here in case you're down a little bit. Volume certainly is down here. Maybe the market thought that it was even going to be worse. Hard for me to tell, but it seems to be, especially in these financials, there's almost the belief that they are too big to fail, that they'll do nothing but make money, and it doesn't matter how many times they do something evil and have to give away $7 billion. This isn't the whole J.P. Morgan thing where someone ran off and did something and cost them $4.5 billion. This is something where they really did something bad and have to pay $7 billion. And it's just tough for me to see why some of these financials don't take harder hits, other than the thought that the Fed is going to backstop these folks no matter what. And it doesn't matter how much money they're going to lose. The low interest rate is going to make up for that. Anyway, that was just one of the stocks. We're going to be looking at some other stocks throughout the day. And you can give me a call, 877-927-6648. You can email me at path@tfnn.com, and I would be glad if you did that too. Or you can post a message in the den, and I will try to get to it throughout the show. Be back in just a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. I had a question in the den, which is very good. And I'm going to answer this question as a statistician would, although I am not one. But I've spent a lot of time programming statistics, reading about them, and having my work reviewed by true statisticians. There are about 50 or 60 major errors that you can make when doing statistics. A great deal of them render any work that you do worthless. There are a great deal of them. We've talked about some of the problems in doing statistics, like survivorship bias. If you're in the Dow, how many stocks that are still in the Dow from 1950? When one doesn't operate real well, they don't just add yet another one, or when it goes out of business, and still continue to put that results back in. That's called survivorship bias. But there's probably 50 or 60 decent biases that can creep into anybody's evaluation of something. In this case, the title of a Yahoo article is, "Stock Market Volume Isn't as Sleepy as You've Been Told." Well, of course, anytime someone sells one, someone has to buy a share. But their argument here is, and the reason is trading isn't heavier, mostly innocuous and structural, like high-priced shares, indexing, and fewer listed stocks. Well, the last one is total lie. There are more stocks. I don't know what planet this guy, who is it? This doesn't say who wrote this thing, but he's full of it. The last sentence says it all. Fewer listed stocks. There aren't. There are more listed stocks. There are more and more listed stocks. In fact, for IPOs, we exceeded all the IPOs from last week, and we're only halfway through the year. So I don't know what planet this guy is on, There are not that many companies that went bankrupt over the last couple of 2 or 3 years. If they went bankrupt, they went bankrupt fairly quick by 2010. Okay, now let's get to the high price shares. So we've got 5 stocks that have high price share prices, maybe 10. You know, there's somewhere around 7,000 listed stocks on the Amex, New York Stock Exchange, and NASDAQ. Now, some of these stocks only trade, you know, whatever, 5,000 shares a day or something. But there are about 5,500 stocks, because I run a scan every night through them, that meet my minimum criteria of more than 300,000 shares a day on average, basically on at least through the last week, and some other things. But I run a scan every night. I look at the data. I look at these shares. I look at about 300 stocks. Probably in a given day, I'll probably go through 300 charts. And let's just go through the other arguments. Let's measure them in dollar terms rather than shares. I don't know how you would compare Google to 20 other companies just because its shares are, you know, fairly high. And market turnover has been firm. You know, maybe you can make a market that everybody, or make an argument that people are holding stocks longer, but there's no data in this article about that. And the reasons trading in any heavier is mostly innocuous and structural. Okay? Doesn't say what is innocuous and why structurally it's happened. I believe that some of the loss of volume in the last year has been by high-frequency traders. Basically, everybody's gotten a fairly good algorithm now, and if you've got an advantage, it's fairly minor. We've talked about on the show about how high-frequency traders are making about 25% of what they made about 14 months ago. So there's a little less high-frequency trading. But high-frequency trading was around in 2000, really started in earnest in 2007, and was pretty heavy. But I can find about, I bet if I sat down, I bet that they busted at least 10 of the 50 biases in any kind of article. So, you know, the one thing I would go out here and say that they have at least an idea on is that market turnover is less. I just don't see any data that supports that. Maybe they put it in some other article somewhere else. But these kinds of things, and indexing, more people use indexes. Well, if you buy more shares, they have to add more shares, which means they have to buy more underlying shares. So I don't see any of this stuff making any difference. You could make a claim that people are buying more stocks because of indexes. But again, that'd show up with the underlying point. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're going to go to a caller in just a second. But if you go to Wikipedia and just look up bias statistics, you can look through just a whole bunch of the ones that are generally blow a lot of statistics out of the water. And I love the way that Nassim Taleb talks about it. Said statistics are basically what tells us what something is either true or false or just anecdotal. And unfortunately, most of the time, what are applied as statistics is really just someone's belief that they are, or trying to reinforce a belief. And basically, if you're going to come out and say something like that, when the underlying share volume's not going to do it, you're going to have to do a study and do more than just say it. And that's why I equated the article to bovine excrement, or called bovine excrement on it. Anyway, we've got Victor from Paramus. How you doing today, Victor?
Good. Where's Molycorp going? I heard there's like a leveraged buyout by some company today. You see the volume and all that? Is it going out of business or what?
The problem they have is with some bonds, and it's unclear what the final... there's no way, let me put it this way, there's no way for me to know. They've got some bonds, and the contracts and the application of how those things need to be taken care of are not public. So the problem that they have here is how they pay the premiums back on those bonds, or the coupons back on them, for a better word. I'm not a great bond guy. Huh? Oh, Victor fell off the edge of the earth once again. I'm going to have to make sure that we all get together and buy Victor a decent phone. But anyway, it is with Molycorp, I've wanted to buy them for a while, thinking that this would be a huge pop. But every time they get back down here, it's like the Roach theory. There's another one that comes out of the woodwork. Just very tough to see what's going on inside this company right now. But it's all about debt. And in fact, it's got 13 minutes. There was a article on Eagle, wasn't it? EGAL. And it's very similar to this, EGLE, Eagle bulk shipping. Someone, I think it was Tom, was talking about it, didn't know why this thing had blown up. There were two good articles on Seeking Alpha. And one of these well-written articles basically dug through and found, with a huge amount of effort, all the problems that were underlying Eagle's actual bonds. And they thought maybe it would be worth as much as $2, but maybe I'll dig this up during the break. But very good articles, very well thought out, things that you could go check. But basically it has to do with a recent company in this bulk shipping going bankrupt and how much it ended up being in bankruptcy. But they haven't paid their debt on loans since back in April, and I think they have less than 30 days to do it. There are some other underlying problems that if they do pay those, then they got to pay somebody else, and it's well thought out. I'm sure if you just do Eagle and go to Seeking Alpha, you can find the article. But basically, when you dig into it, this is the same kind of problem that MCP has, and that is it's tough to find all the stuff. This guy did a lot of work to dig it out, and normally a blogger on something like Seeking Alpha is not going to move a stock down 30% in one day and have some follow-through today. But it certainly is one of those things where if you shine the light on it, someone can check it, and they go, oh, my God, that's absolutely true. It can be pretty good. And I think somebody actually did the work. And a lot of people were short this one, just waiting for it to go. But in bankruptcy, you could get $2 back, they thought. But that's the same thing. You're going to have to do a lot of work on MCP to go back and rivet this stuff out. And it's not easily findable, especially with MCP. I went and started looking through some of it last night when I saw this article on Eagle to see if I couldn't get the same kind of info on MCP and see whether they're doing okay. But there's something bigger going on out there and in this stock, and you're better off just to stay away until this thing settles out and or it gets something. But I don't think these guys are getting bought out, let me put it that way. The one thing that really makes me think that MCP might be a buy one day is that the government is behind them as a strategic initiative to make sure that there are rare earth metals in the case of any protracted war. And right now, pretty good. Molycorp was built on the Chinese fixing the price of rare earth metals. They lost fairly large in the world court for price dumping. And then, of course, as soon as they dumped it and ran everybody out of business, they went back up and started jacking prices up. But they got their hands caught in the cookie jar, the Chinese did, on this. And it's going to continue. But Molycorp had to the point where they were starting to produce. I listened to the last earnings call, and interesting company. But there's something else going on out here. So I'm going to say that until we know that their finances are taken care of and that maybe they get some additional money so that they can last another 6-9 months, you really have to watch out for these folks. But I think whoever gets them, maybe someone else does buy them out. It's probably going to be a good investment. They have one of the best mines for rare earth metals, well, at least in this hemisphere. And, of course, the only ones really doing anything of merit are the ones in the big one in Mongolia and the two smaller ones in Australia, which, by the way, the Chinese have locked up all the output to. So, yeah, thanks, Victor. But, yeah, I looked at it, and I've been wanting to buy it, and the problem was just the volume down here. I didn't want to see this thing go below this 244, and once it did, the volume picked up 9 million shares. And, of course, you didn't want any more than 8 million shares from the June 3rd low. So technically, it was already telling us that it's exceeding its volume of that June 3rd low by 20% or something, that you really have to watch out. So, we made a low here at $1.88. Now, if we come back into this thing with maybe 4 or 5 million shares and you just can't break $1.88, maybe this thing has bottom, but need to watch out for those things. What else is going on out here? I saw some interesting movements in some of these gold miners, and Pan American Silver is one of them, PAAS, Pan American Silver. Uh-oh. I think we just got hit by lightning here. Hopefully everything's still running. But we are in the lightning capital of the world for new listeners. Tampa gets more lightning than anybody else. So we're getting absolutely hammered right at the moment. But Pan American Silver up against this February 21st high, $15.50, and 3.3 million shares. It came up into this. You really needed a lot. You had 2.8 on the 19th and of last month, but you really don't see anything else that got up here, especially as we've gotten to that 1550 level. Once again, we kind of went into it today. So some of these miners look like maybe they're fairly toppy out here. DSX, which is Diana Shipping, a kind of on the backs of Eagle, looking at this one. And this one actually looks fairly good on a volume basis. November 22nd, $10.42, 2 million shares. This thing has been pierced, but you want you're just above it out here, $10.45. But certainly didn't get the kind of volume to bust that previous low from the November 22nd, 2013 low at $10.42. So fairly interesting out here. Okay, I'm just checking to see if there's anything else going on. Let's go back and look at the S&P here real quick. Up 8 points right now on the S&P cash, 1.9 billion shares. So again, a fairly light volume. And a little pull off back here. And keep an eye on some of these things. We'll keep an eye. Okay, what else? Wanted to look at a few other stocks hopefully from yesterday. I wanted to see how Expedia was doing. It's continuing to see a little bit of weakness out here, but kind of tough to see it. Gold. Let's take a look at gold again. Yeah, this is up in the gap today. That gap goes back to, February 15th of 2013. 700,000 shares, not all that much. So you are back in that little gap out here. Okay, HP, we've been watching this the last few days. It's kind of pulled off this top. Again, this one is one of the few that actually had some fairly decent volume back on the way back up to the top. Just doesn't look like there's enough energy in a lot of these stocks to break these highs. Got to 118.95, previous high out here, April 24th, 3.1 million shares. So light on that, kind of pulled back. Hadn't been a lot of volume on this pullback either, so we've kind of got to be watching those also. Starbucks, we've been talking about this for a couple of days too. Not a lot of movement in this thing, but certainly going back up against its March 21st high. that had 9 million shares. And, of course, last 4 days, 3.3 million shares, 3.7 million shares, 3.8 million shares, 2.2 million shares so far today. So going to be way under that, but should see probably a lot of resistance in that area. And let's even go back to a few more days ago. Want to see how some of these stocks. BlackRock was another one that we talked about last week. I'm wondering if maybe the bond action hasn't set kind of a high, at least temporarily, in some of these bigger investment firms like BlackRock. BLK is a symbol. But you had the high volume spike on January 16th, $324.07, 1.5 million shares. We tried to get back in that at April 2nd with 580,000 shares, or a third. And again, another attempt on about a third of that volume, up to 324.86 on the 1st of July. Kind of pulled back, pulling up today on a very light volume. So wouldn't take a lot to give sell signals in a great deal of these stocks. Lumina, another big DNA company, had been up on highs. This one got close, 2.5 million shares to 2.2 million shares on the July 2nd high, when we go back and compare it to the March 4th high. So it did come up there, test on lighter volume. It's pulled back into this trading range. Volume did kind of expand the last couple of days. Now you got light volume today. And a lot of times you're going to pull back up. We've been talking about this double repo pattern, of course, the last couple of days too. It is the basically equivalent where you go above a 9-day moving average for 10, 15 days. You close below it like we did yesterday. You go back and close back above it. The next tick back down is normally the sell signal. So we're watching a few of these. In fact, I like to use actually the displaced moving average. It's not as nice, but we're kind of solidly under these short-term moving averages like the 3x3 displaced moving average. What you want is this thing to probably come back up here, crack that for a day or two, and then close below it. And that normally, if you don't get any volume, is a good sign that we've seen the lows. Of course, we've been talking about Pandora, and it's setting up an ABC down. And, of course, this could be rather a huge ABC if we look at the bigger number. Let's see, 44.21, 44.21. Is that in here? No, it's not, but it could be a huge ABC. Let's go back and set this thing up. Select this A. Go back up here. Select this A. Select this B. And select our little known C out here. So that sets it up, and could be setting up an ABC to $11.51. And since no one's ever really made any money in streaming music, and Apple's getting into it, everybody and their dog's getting into it, it seems rather interesting. Anyway, we'll be back in a minute. You can give me a call at 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And had an email from Nancy, and her last name is the same as the actress in Raiders of the Last Ark. So I'm going to tell her how much I liked her in Raiders of the Last Ark. I'm sure it's the same Nancy. But anyway, I digress. Wants to know, do you see GTAT making a bottom here? If not, where? I've talked about this several times. The question I have is, who is going to come along and buy as many machines to make the sapphire ingots as Apple would? I just don't see it. We know Samsung's committed to using graphene and graphene flexible displays. They've built $1.5 billion facility just to do so. So who else is going to come along and do that? Especially when the bulk of the market is people actually using and buying less phones, as we've seen from Samsung. In fact, I saw data today, and I'm not going to drag it up. I don't have time right now. But basically, we're going to see a fairly decent retraction in the amount of people who bought tablets in the last quarter compared to last year. That was supposed to be a huge growth market. It looks to me like it's tapped out. At least the last quarter is. So people that wanted to buy tablets have. My guess is that we're probably, if you look at Samsung, the same thing. And that is that people that bought and wanted a super phone and have an iPhone 5, probably not going to buy a 6. People that bought tablets last year are not turning them in and rolling them to get new ones either. and we're seeing that in the volume. So I'm going to have to figure out who's going to go and buy enough to build 200 million faceplates like Apple did. So I'm going to say this is rather temporary. I'd be very nervous to try to go back and do any bottom fishing. But the first possible place that I would think that bottom fishing would come in would be back down around the $12.74 level. Maybe you can find somebody else that and give me a fundamental case on where they're going to get the somebody to buy the amount of ovens, which is what they do. They make ovens to build crystals and sapphire crystals specifically for solar, that kind of stuff. I just don't see those people coming along. Maybe there is a business, but I just haven't heard of it. They haven't talked about it. And my guess is that this is going to be like a lot of these stocks. You get 2-3 quarters, with somebody big like Apple buying your product. What happens after that? So I would watch it very closely. My guess is that this thing's probably going back down to $12.74 sooner rather than later. And if I was going to buy it, I'd probably have to make sure that I was able to get that mid-$12 price range to get it correct. Panera is another one. Been watching this thing, and it has come back down to this long-term gap, which should be fairly decent support. The volume on that thing, it gapped up, August 25th of 2012 with almost 3 million shares. That gap is kind of acted as support. Didn't get into it October 24th last year. Got down to 150, but it's solidly in it last few days. The best volume we've had is 640,000 shares. So pretty good support back here. If we're looking for stocks that have made bottoms, this one looks a lot more interesting to me. Light volume up on the day. I don't like the market, as I've said, and thinking probably what we're seeing today has more to do with option expiration than it has to do with the market. We'll see what happens tomorrow. See you tomorrow. Remember to sell when you can, not when you have to. And also, see you tomorrow. Same bat channel, same bat time. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.